Hey, what's up, everybody? So, welcome back. Today is a new week, a new day to trade. I'm so glad to be able to join you guys. And so today I'm actually going to be trading live, guys. So this is going to be really exciting. I haven't ever, I guess I have done this before, but I'm trying to improve a little bit. I'm trying to really show you guys how I execute my trades, how I find my trades, and just really what it looks like on interactive brokers. If you've been joining my channel, if you've been following me, you would know that I talk a lot about interactive brokers because interactive brokers is so important in some of the options trading I use. Specifically, the strategies with selling puts. Like with interactive brokers, you get something called margin, and so margin just allows you to trade a lot more, especially if you're selling insurance. And basically, my strategy this year has really just been selling put options. So basically, allowing the stock to go further down. If I get assigned, great. These are companies I wouldn't mind owning. And selling put options far out so I could collect a lot of premium. And that way, if I do get assigned, I collect all the premium for a year out. And that makes the stock just so much more attractive because not only do I get the stock at a discount, but I also get it at a pretty nice premium. Okay, so if none of that makes sense, just follow my channel and hopefully you'll pick up more along the way. I do want to try and break this down a little bit easier so that more people can understand. And so right now, guys, I just really think a lot of wealth is going to be built in this market. And even if you're not very wealthy, even if you don't have a lot of capital, you can still this totally still works for the average Joe. In my opinion, you don't need a whole lot of collateral. You do need a little bit of collateral, but even if you're not trading with a lot of money, I think this still works out pretty well. Okay, so taking a look at my interactive brokers account, we are slightly up today, so very happy about that. The last couple of weeks, the market has been just down and just brutal. Okay, a lot of sell-offs, but that's fine, right? Especially if you have options where you're selling put options and selling on companies that have strong fundamentals, strong balance sheets, all that. That's completely fine because if it keeps going down, then you might get assigned, but great. And if not, then you just simply keep your premium, and these premiums are 30-40%. Okay, so today, let me just kind of walk you through this. Sometimes the best way to learn from my experience is just to kind of go through it, and then hopefully along the way, you'll pick it up. And if you have any questions, guys, feel free to leave a comment below. I'm always more than happy to help out, and so just feel free to share some dialogue. Okay, so before I trade or do whatever. Usually, I would go ahead and do my research throughout the day. So this morning, this past week, I've done some research. I identified some stocks that just have strong balance sheets. I think I've shown this in some of my other videos, but I'm not going to cover that today. I'm simply just going to go right into trading. So you can take a look yourself at these companies. But these are actually companies that I'm trading myself. And so this is not any kind of financial advice, but simply just stocks that I'm trading myself. Okay, so and if you like this content, if you want me to make more live videos or just videos talking about stocks and options, make sure, guys, you like and subscribe. I would really appreciate that. It would help out my channel and get the word out on these option strategies to more people. So without further ado, the first stock ticker is just OLN. Okay, so OLN. Again, I'm not going to go through the fundamentals, but it has very low price earnings ratio, great cash, just all around great company in the oil and gas industry. So we're going to go ahead and sell a put. Okay, so selling a put just basically means, and hopefully you can see on, I'm going to try and make this a little bigger when I edit this video. So over here, we're going to sell a put option expiring a year out. So meaning that from today up until January 2023, if the stock goes down to a strike price of whatever I set, I may be forced to buy 100 shares. Okay, so this is really as simple as that, right? So if OLN falls down to $45, I may be forced to buy 100 shares at $45. So that would mean I would need $4,500 to execute this trade. But I collect a premium. Okay, so I collect a premium of $7.20. Okay, so keep in mind every single contract, okay, that every option contract is 100 shares. So just times it by 100. So I'm collecting $720 off of off of this trade. Okay, so let's take a look at what that looks like. What I like about Robinhood is, well, usually they'll show you a little chart. Okay, so the chart is not showing, but we'll just go without it. Okay, so, okay, I can't figure it out. Okay, so usually they have a nice little chart. If you use Robinhood, you would be very familiar with that. But this basically means that I'm collecting $720 off of, and deduct that from the 4,500. So I think I can't do math off the top of my head, but that's about $3,800 in collateral, and I'm collecting $720. So I'm basically making, that's like, I don't know, like pretty good percentage, right? That's fairly decent for the amount of money you would make off of the collateral. And keep in mind, again, that's why I use Interactive Brokers, because you are going to have $3,800 tied up in collateral. But if you use Interactive Brokers, that really doesn't matter, because look at this, right? Your net liquid value. Okay, so whenever you put in money into Interactive Brokers, your buying power will be multiplied. Okay, so because you're especially, you would have to choose margin. But if you're trading on margin, so it just means that if you have to execute, or if you are forced to, buy up those shares, then and if you're out of cash, then they would simply use margin, and margin is just a lot more money that you did not have that you would have, because the brokerage, or in this case Interactive Brokers, the bank, is also allowing you to borrow money at a really low rate of 1.59%. Okay, so I think today I'm going to compare the let's see, I'm going to try and compare the price. Okay, so the 2024 put is $1,000, and then compare that to, man, I don't know what's wrong with this chart. I think because I'm trying to do dual screen, I can't seem to pull up the graph. Okay, so that's actually really important, but let's just try and do without it. So, okay, let me see. Let me try and, okay, so let me see. Okay. This is actually a little harder than I thought. Okay, so I think I'm probably gonna sell a put at $45, just because uh $720 and $1,000, it's not that big of a difference. I would collect $300 more if I sold a put out a year more further, but in this case, I'm actually pretty happy with $720. Okay, that's about 18% return. So that's pretty good. Okay, so not bad for this trade. I'm gonna try and go ahead and execute it. But before I do that, actually, I'm gonna take a look at some other just other stocks that I've been looking at. I just want to see. I just want to take a quick glance at all the available stocks. So let's take a look at CCS real quick. So CCS is Century Communities. Okay, so is that right? CCS. Okay, yeah, CCS. So we're gonna go ahead and trade options, and we're gonna sell put. Okay, so let's see here. So we can sell to all the way to September 16th. Sometimes they don't give options all the way out to a year out, so that's completely fine. We're going to look at the $60 put. And so right now we can collect about, oh, there's a chart. Okay, so finally, okay, great. Okay, so, okay, we're collecting about $880 off of max loss of 5,000. Okay, so I don't really like the premiums too much on that. Let's take a look at, let's just take a look at MOS. Okay, so MOS is trading pretty sideways. Let's take a look at Ford. I know Ford had a recent drop. So we're gonna see how Ford is doing, how much a premium we can get for on Ford. So if we sell the put out into the rest of the year, if we sell it at 17, we'll collect about $300. Okay, so that's still not a really nice premium. I'm looking for a really nice premium, just because I really would rather not get signed. But if I do get signed, it's fine. So I can open up in 2 years. Okay, so that's a little better, but I'm probably gonna hold off on Ford, just because I know there's a lot of supply chain issues on Ford. So probably what I'll do is I'm gonna go ahead and just show you guys a trade I wouldn't mind owning for sure. PBR, Petroleo Brasileiro. Let's just take a look at how it's doing today. It's down a little bit. Let's just go ahead and sell a put out into January 2023. And so right now we can collect about $300 off of a max loss of 930. So, okay, so yeah, I think I'm just going to do that. That's about 30% return. So let me show you how that works on Interactive Brokers. So we're going to go to Interactive Brokers now. And then we're going to search. Okay, oops, let me move this. We're going to move this over here. Okay, here you go. So we're going to look PBR. Okay, so PBR. And now I'm going to go ahead and set my expiration date to January 2023. And I'm looking at Robinhood. And the reason why I use Robinhood is because it's just a lot easier to figure out what you're doing and kind of what the premiums are on the market. And, it's just a lot simpler, as you can see from Interactive Brokers. But I still use Interactive Brokers mainly, for the margin. So let's take a look. So we're going to open up at $12. And as you can see, there's a little bit of discrepancy. Usually there's possibly even more. And that's just because, I think, because of some time delay, which is totally understandable. Let's just take a look out at 2024. Okay, let me see how much I can collect. 400, 270. Okay, so I'll just do 2023. Okay, so 2023, $12. And we're going to sell the put. And okay, so over here, okay, so when you go down to here, you're going to go ahead and sell the put at the same strike price that we see. Okay, so $2.70. Okay, so sometimes if it doesn't fill, that just basically means that your price is you're asking too much money, and you would just lower the price. So I'm going to see if this fills. If not, then I would just simply lower the price, and that usually should do the trick. Okay, so let's just see if this fills. So again, 2023, we're collecting $270 off of a collateral of like 900 something dollars. Okay, so accept and continue. Okay, so as you can see, it did not trade, and as you can see in Robinhood, actually went down. Okay, so in this case, what you would do is you would just simply lower your premium. Okay, so I'm gonna do 265, and this may not even fill still, so we'll see. Okay, so that then filled. So let's try it one more time. Let's try it at 260 and see if that fills. Okay, so there you go. So the order filled at 260, so I collected $260. And if the stock drops down to $12, I'll get assigned. I'll possibly get assigned, but I can offset some of the costs with the premium I collected of $260. That's like almost 100 shares of PBR, so that's great. So yeah, guys, that's pretty much how you execute trades. Again, today I'm taking a look at OLN. I forgot the name of the company, but it is in the oil and gas. CCS, it's in the building supplies. Airbnb and Facebook are a little risky. There's a lot of different analyst opinions. Coinbase is another one I'm looking at. Bitcoin all the cryptocurrencies have begun to recover a little bit, and I do think Coinbase is trading at a pretty low P ratio. BTU, BGFV, MOS. One thing I'm keeping in mind in the stock market, especially around this time, is March is going to be really shaky just because the federal government is going to be talking a lot about what they're going to be doing with inflation and all that. So, I'm not doing a whole lot. I'm definitely not trying to utilize all my margin right now because, we really don't know what's going to happen, guys. I think, the 2022 is going to be a very volatile market, like I've said, like so many times, right? And so I would say don't rush into it. Be patient. You're going to find great deals. It's great to identify stocks that have great fundamentals, that are great, and it would be fine, I think, in my opinion, especially if you're selling puts, to go ahead and just add one contract or just buy slowly into it, right? And if you see a big dip, right, that's when you can start to execute a lot more trades, and come after March, right after March we'll kind of see what happens. But for now, I'm trying to save most of my margin. I'm not really utilizing. I don't think any of my margin right now. I did collect, a good amount of premium the last couple weeks after the drop. I think it was like $65,000. Open up some Tesla puts and some other several other puts. And so yeah, it's pretty exciting. I think there's going to be lots of great opportunities to continue to sell puts for premium. And I know there's a lot of other strategies out there, guys. I know that people are buying calls, people are selling shorter put options, but you do what's best for you. But what I would just say is just make sure you know what you're doing, invest safe. Don't get too wild, especially because this market might come back and spank us in the butt. But stay invested, guys. I think if you're patient, you're gonna make a lot of great money. Okay, I hope this content is helpful. I hope I've earned your like. So if you haven't liked or subscribed to this channel, I would really appreciate if you do subscribe, just so I can keep up, or you can keep up with some of my videos. If you have any questions, guys, make sure to leave a comment. Feel free to just leave ask your question in the comment section. Let me know if there's any videos that you want me to cover, and I'd be more than happy to do that as well. Okay. All right. I think that's it for today, guys. I will see you around in the next video. With every star